Spirit Airlines just went into Chapter 11. Let's talk about it. So this is something that's been coming for a while. Spirit Airlines had a tough year. They had just announced a furlough for pilots, which was pretty unusual coming out of the pandemic. There was a lot of demand for pilots, very strong hiring, a lot of demand for flights. We had the hard revenge traveler rebound coming out of COVID, and that's softened up in the past year. There's been a great slowdown in hiring with the airlines, a great slowdown in expansion. Some of that is due to reduced deliveries from Boeing and Airbus. There's also been a rapid deceleration in demand within airline travel and the ticket prices that airlines can charge passengers for flights. Spirit Airlines suffered from the beginning of the year. We can look at the stock, and you see January, right at the beginning of the year, they're trading $16, $15 a share. You see them fall off the cliff associated with earnings and reduced outlook. That's a huge decrease, a 70% dump, and then just kind of a gradual deceleration until we're at the point we're at now, which is 15 cents a share. It's going between 17 and 15 cents a share. We'll start with that. Spirit has announced that shareholders who own the current share, the stock is SAVQ. So SAVQ, that's a stock market ticker. It's over the counter now, but for anyone who owns shares of Spirit, they're valueless. They're trading at 15 cents. Every once in a while, someone gets an idea who doesn't know much about the stock market that, hey, I can go buy these shares. Look at it. They were worth $16.50. They're going to come out. They're going to reorganize. They're going to go back up to $16. I buy it at 15 cents a share. And, I put $1,000 into this. It's going to be $100,000 in 3 years. No. If you put $1,000 into it, it's going to be $0 in about 6 months. Shares are going to go to zero. So for those of you who aren't aware of how the stock market, how equities work, how Chapter 11 works, don't go buy shares. Don't think this is going to be a GameStop type of a scenario. It's not. The shares are going to be worthless here coming up. So what's the CEO of the company saying about it? What's the company's perspective on it? What's it mean for, and we already talked about Thanksgiving's right around the corner, so is Christmas. Shouldn't really affect Spirit. The flights that are already booked, passengers already paid for the flights. Chapter 11 means that Spirit has already offered some reorganization options to their debtors, and the debtors, at least big debtors, have agreed to that, so they're not forcing them to pay their debts off. They're allowing them to keep operational cash, to put fuel in the airplanes, to make payroll, to actually fly the routes that they're flying. The idea being is that they'll be able to reorganize. They'll be able to trim off some expenses. Probably in the long term, they're going to get rid of some routes that aren't as profitable. They're going to lay off some employees, and they'll get back to making money so they can pay their debts and offer some equity value to shareholders. So when these bonds come due, they owe that money to the debt holders. You're going to have large debt holders, banks, investment funds. They're going to go to Spirit, say, you need to pay us our money because the bonds are mature. Spirit's going to say, we can't do that. We'll have to shut down operations if we do that. And then you'll have to liquidate us and you won't get very much money. You'll get pennies on the dollar. And so the debtors say, okay, we'll agree to not force you to pay us right now. If you reorganize, if you get rid of all of your equity, so the stockholders who have equity in the company will basically be wiped out. You do that through Chapter 11 through the courts. They wipe those people out, and then Spirit can issue stock again, and they can sell that on the market, and then debt holders will take that equity. They'll take some of that equity to pay them for not getting paid right now on their debt. So they'll get equity. Spirit will sell stocks on the market so that they can raise funds so that they can fund reorganization, because it's going to cost them a lot of money to reorganize. They're going to have to get rid of airplane leases. They're going to have to sell some airplanes potentially, probably at a discount, in order to fund cash and to right-size the operation for what they're going to be doing going forward. And then they're going to have to lay off some employees most likely. That costs money. There's severance packages. So that's going to be the general process that they take going forward. But if you got tickets in Thanksgiving or Christmas, you're traveling, you really don't have to worry about that. They're going to be, this Chapter 11 arrangement they have with debtors is going to allow them to fly those trips. All right, so let's get into, there's a couple things here. The one thing that's always interesting is when you deal with the CEO group. So they have a retention bonus, and these retention bonuses for the CEO, president, 3.8 million, COO, 850,000, CIO, 300,000, CFO didn't get much, 175,000. They didn't feel like the CFO was going to be able to leave the company under bankruptcy because they went bankrupt. If your CFO, chief financial officer, company goes bankrupt, you may not be in high demand. So they didn't pay him much to keep him. But they paid Christie the third, who's a CEO, 3.8 million, basically saying, "We'll give you 3.8 million if you stick around through bankruptcy." So a company went bankrupt, we're going to give you 3.8 million to stick around. It's a common thing for them to do. It's kind of disheartening if you're an employee and you're looking getting furloughed, and the CEO is getting a bunch of money for having seen the aircraft go into bankruptcy. But he knows the operation right now. Bringing someone else in at this point would be catastrophic. So that's the way it goes. We'll get into some of the coverage here. So what does the CEO have to say? And it's a little bit of a bromide. This set of transactions will materially strengthen our balance sheet and position Spirit for the future while we continue executing on our strategic initiatives to transform our guest experience, providing new enhanced travel options, greater value, and increased flexibility, said Ted Christie, who's the president and CEO of Spirit, in a statement just on Monday. There's a couple things here to focus on. The first thing is the ultra low-cost model that Spirit represents. They call it no frills. What it means is we sell fares very cheap, and we make that money back on ancillaries for the most part. So we're going to sell you a fare for less than Southwest, United, American, Delta, but we kind of get some of that money back. We do it two ways. The first is we pack more seats on the airplane, which means that you have less space, you have less recline in your seat, you're a little bit less comfortable. And the second way that we are able to offer you lower fares is that if you show up to the gate and you have a backpack that's a little too big, we're going to charge you $150 for it. If you know beforehand that you're going to have some baggage, you can buy an upgrade to the ticket, and that actually gets you closer to what American, United, Delta, and in truth, probably gets you pretty much the same fare if you're really pricing it out. But the strategy is we're going to show you an eye-popping low-rate fare that no one else has, but we're going to make up for it in a variety of ways. And so that's kind of been the business model. Coming out of the pandemic, it appears as though price-conscious shopping has changed a little bit, where people are less likely to sort of hook, line, and sinker a very low fare. Either they recognize they're going to have to pay more in the long run, or they recognize that I'm going to be sitting in an upright seat on a relatively long flight. I'm not going to be very comfortable. And if I need a glass of water because I'm thirsty, they're going to charge me $3 for it. And they just don't want to go through that. So there has been a drift away from the ultra low-cost model. It appears as though the ultra low-cost model may be dying. There's not real passenger demand for it. And you can see in the CEO's statement, he says strategic initiatives to transform our guest experience. That means the ultra low-cost model. They're probably going to head in the direction of some of the other airlines, offer some complimentary stuff, sodas or whatever on the airplane. Who knows? They may do that. They may not do it. They're going to provide new enhanced travel options. We don't know what that means. Obviously, that means they're going to try to raise ticket prices for their offering, which is going to be hard for Spirit because no one wants to go on Spirit at higher prices. Kind of the main pull for Spirit has been for the price-conscious traveler. So it's going to be hard for them to raise value there. Greater value and increased flexibility, they're saying as well. I also say here, so Spirit's low-cost airfare model was always known for low base fares, but passengers pay for carry-on, check bags, and seat assignments. The airline's average round-trip fare was $140, not including taxes, fees, or ancillary revenues. Pay attention to the ancillary revenues because that's, if you're going to bring a bag, you don't pay that in the base fare, but you have to pay it. So for passengers, you're really concerned about what you're paying at the end of the day. According to aviation analysis firm Cirrus, the number is slightly higher than competitors Frontier at $136 and Allegiant $134, but typically far below mainline carriers. At the end of the day, if you're really an experienced traveler, you know that you're not really getting the deal you think you're getting if you plan ahead and you know the bags you're going to have to take. If you show up with the shirt on your back and that's it, you're going to get on the airplane, you're not going to bring clothes, or you're going to bring a very small carry-on, you're actually going to get a lower fare. You're going to get a lower ticket. But most people have to bring a bag. You have to bring some clothes. Most people have to do that. You're going to pay extra money for that. And you kind of end up paying the same that you would pay for an airline that offers more amenities in flight, offers free sodas, offers maybe a little better customer service experience, and offers seats that are more comfortable. So Is kind of why the ultra low cost carrier is starting to fall off the cliff. People know what's going on, and then they prefer coming out of the pandemic. They want to spend, you can't take it with you, spend a little bit of money, be a little bit more comfortable. There's a few options. This isn't the first time that an airline has gone bankrupt. Just sort of the first option is that they reorganize, they get rid of some higher cost routes. They focus more on maintaining the more profitable routes, and they get rid of some aircraft, they get rid of some staff, they lower their expenses, they increase their revenues, and they're actually able to return to some degree of profitability. Hard to do that because you're shrinking, you're reducing route structure. If you shrink your route structure, one of the big sources of revenue are loyalty programs. One of the jokes we have in aviation, which is kind of, it's actually kind of a truism at this point. We're really credit card companies that fly airplanes is what the airlines have become. And you get pitched every time you get on an airplane, you get pitched for a credit card. Well, the reason why is there's a ton of revenue in credit cards, the loyalty programs that get people associated with your airline. They're willing to pay a little bit more because they get loyalty points. They can exchange those loyalty points. You get business travelers, which are high-end travelers. It's tough for an ultra-low-cost carrier to get a business traveler. Business travelers are less price conscious, so they're willing to pay more on a fare to get where they need to go when they need to go there. And so, Spirit is kind of at a disadvantage because their only offer is squeezing margins, basically, is charging lower fares. And there's only a limited number of ways that you can decrease costs. The airplanes cost what they cost. The way that you can kind of decrease the costs on airlines, on the airplanes, is to offer more squeezed seating arrangements. So on Airbus 321, one of the legacies may have 200-ish seats on that 199, 200 seats. Spirit is going to go with 220 seats, let's say. And so that's a 10% reduction in room on the aircraft for all the passengers, which means that you're sitting more upright, you can't recline, you have less leg room. The bigger airlines are offer a little bit more comfort. And if you're in coach and even with one of the legacy airlines, it's not necessarily that comfortable. So it's just less comfortable than that if you're flying with Spirit. So one way you can sort of decrease costs is you can sell more seats. Another way that you can reduce costs is paying your staff less, which they do, obviously, but the trade-off to that is staff. There's more churn. You have staff members who don't get to know how to do their jobs that well. They leave within a year. It takes basically a year to become really proficient, whether it's ramp or customer service. Pilots, by the way, they don't really have an advantage on. There's sort of a pattern bargaining agreement that takes place within all the pilots unions and all of aviation. So as narrow body pilots, they're not getting paid that much less than legacy brethren. So they don't really have an advantage in pilot costs. They have maybe a small advantage, but not that much of advantage. No advantage in fuel costs. The airplanes cost what they cost, so you have to squeeze the passengers. From a comfort standpoint, there's no free lunch. So that's how they're more efficient for the most part. They save a little bit on customer service, but you get less customer service as a result. You don't get as good customer service. So that's the trade-off. We'll give you a cheap fare, but don't expect to enjoy the experience is how it goes. There is a market for that, but that market appears to be eroding and shrinking. All right, so we go into what's this mean for Spirit going forward? What's going to happen to them? So the first option is that they come out of bankruptcy, they reorganize, they're able to start making money, they get rid of some of these less efficient routes without turning off too many of their passengers. Chicago to New York, for example, is a route that you're going to lose money on average for an airline, but you fly that route because you have passengers who need that route, and if you're not flying it, they'll go to your competitor. You want to keep them on that route for when they decide to do a route that's more expensive, that's more prolific. So if you get rid of that route, you're going to save money, but you may lose passengers. It may cost you more in the long run. So it's a difficult decision to do. It sounds easy on paper. We're going to get rid of the routes that aren't making us much, but you're also getting rid of options, and you're going to get rid of loyalty passengers, which are there's kind of profitable passengers. So it's a real line that you have to tread. It's not clear that they're absolutely going to be able to do that, but that's what they're going to attempt to do. So if they can do that efficiently, if they can get rid of routes that are low margin routes without losing passengers who are high margin loyalty passengers, then perhaps they can return to profitability. If they do that, they remain an independent entity, and then they just go on from there. And listen, this isn't the first time airline has gotten bankrupt. Within the past 20 years, United, American, Delta have all gone through bankruptcy. They're all alive and well today. So it's possible they could go through this, then come out the other side. They can maintain independence. They can change their operation a little bit. they can drive a little bit more value for passengers, and then they can be successful going forward. The second option, and within the last year and a half, 2 years, 3 years, they were going through the process of trying to merge, be bought out. Frontier was bidding for them. Then JetBlue got in the act. JetBlue started making an offer. They were about to close on that offer. The Department of Justice under Biden's administration objected to that. Federal judge sided with the Department of Justice. They said that it was going to reduce competition, and so it was not legal. Federal judge agreed with that. They squashed the deal. Going into Chapter 11 makes that more possible, where they say, well, you're going to lose a competition anyways because we're going to have to reduce our flight files. So you're already going to lose that competition. We can gain efficiencies if we merge now or if we're bought out by JetBlue or Frontier, and those efficiencies will mean we'll have a cheaper product. We'll still have competition. It'll be good for consumers. It'll be good for the employees of Spirit. It'll be good for the traveling public. And then they can sell that. Not to mention the fact that you have a Trump DOJ now. And a Trump DOJ is probably less likely to object to a merger than a Biden DOJ. Now, the trick is you're going to have to get that past the debt holders. They're going to have to perceive that it's better for them for this merger to take place. It'll be more profitable for them for this merger to take place. And you have to have, in a softening environment, it has to make sense for JetBlue or for Frontier to take on some debt in order to grab the routes and the airplanes that Spirit has. So they have to say that the value of what they're getting is worth the leverage that they're going to have to take in the debt market in order to get it. You have a company, of course, in Spirit that's been losing money. That's why they're in bankruptcy. So that could be a tough sell. At the same time, there may not be as much cash flow as there was a year and a half ago when Frontier and JetBlue were talking about buying Spirit. So that could throw a monkey wrench in there, but that's a possibility as well. There'll be some sort of a buyout. There'll be some sort of a merger. There'll be an acquisition. Most likely, if there's an acquisition, it's either going to be JetBlue or Frontier. Frontier makes a little bit more sense because the aircraft seating arrangement is more in line with the seating arrangement. JetBlue will probably have to remove the interiors and put their own interiors in there. And then the final possibility is they can't make it work and they liquidate. They are not a super large airline, but they are large enough that liquidation would be fairly significant. So I don't think liquidation is very likely. I think either an acquisition at some point, it'll make sense for an acquisition if they can't really do it on their own, or they can come out, they can reorganize, they can be smaller, they can be focused on route structures that are more profitable, and they can go on and continue business. Liquidation, though, remains a possibility if we enter a recession in the next year and a half, 2 years. Right now, the market isn't in the doldrum for the airlines. It isn't necessarily high as far as pricing power goes for the airlines, but it's not a recessionary environment. In a recessionary environment, they just won't be able to recover. Anyways, that's your quick update on Spirit, bankruptcy and Spirit. Hoping that it works out for them. Like and subscribe, by the way. Everything I'm doing now, I have Flying for Money 3D. It's a new channel. If you have 3D glasses, this is all in 3D over there. If you have VR, it's really for VR headsets. There's a lot of 3D content over there, recreations, cockpit flights that I do, things of that nature. This video as well. So go on over there, like and subscribe. Like and subscribe to this channel once again. Thanks for watching. We'll see you next time.